All right, welcome everyone to a very special live dual streamcast with myself, Denny. My name is Denny Cards, and this is going to be simulcast both on Ryan's and my YouTube channels. So hopefully you're joining us from one of those two. I'm also simulcasting from Instagram live, but I will not be able to see any of the the comments in the live because with StreamYard, apparently there's some sort of hiccup or inability to do that. So if you want to comment, please go ahead and head over to Ryan's YouTube channel at Mid Atlantic Card Show or my YouTube channel at Denny Cards. And before I turn it over to Ryan, who will, I promise, be doing most of the talking tonight, because he was planning to do this earlier last week, and I kind of like I was like, hey, why don't we do it live together? So he is definitely more knowledgeable. Neither of us are experts in the tax field, though. So I do want to make that caveat. And I am going to read a little disclaimer, and maybe I will put it in the comments, but I'll just read it out loud first, which is that nothing that Ryan and I will be talking about can or should be construed as legal or tax advice. As with everything regarding the legal and tax field, please consult a professional legal or tax advisor to help your individual needs. And that is very important to say because what I do with my taxes, what Ryan does with his taxes, may not work for you. And that is very important to understand. And I do want to give it a little shout out. He is not sponsoring this, but I know that the Hobby CPA is good people in the hobby, and he is an actual professional tax CPA. So if you do have some needs, I'll put that in the comments and chat as well in the YouTube. But I'm gonna turn it over now to Ryan.
Thanks, Danny. Hey, I'm just kind of technically not a novice with this streaming stuff, so I'm just making sure that the stream is going on my channel as well. So sorry about that. Just bear with me a second. I think um, I know we were trying to work this out beforehand, and hopefully it is. All right, says it is. So cool. Maybe. All right. Yeah. Hey, everybody. Ryan, Mid Atlantic Sports Card Show. Met hopefully many of you before at our show in Silver Spring, Maryland. And for those of you I haven't, so I got interested in this subject largely for personal reasons. I needed to figure things out for myself and for my sports cards and my sports card hobby and card shows and all the activity that we've been up to. And I was coming at it with a little bit of background myself. So I actually am a tax lawyer, but I don't practice in this area at all. I'm not focused on I don't help individuals with filing individual taxes or tax planning or businesses really. Kind of focus on tax legislation and tax law and tax policy stuff. But I was really interested in all of these topics. So we're going to dig in and we're going to talk about some of the biggest issues that I think that people need to be thinking about in sports cards with their hobby, with their business, with the job, with the sales that they're making and the income that they're bringing in. I just kind of say from the beginning, in addition to the disclaimers that Denny put out, is that taxes are extremely fact specific. So, we can talk about general rules and general concepts and rules regarding what's deductible and what's not deductible and everything. But where the rubber really hits the road is when you apply that to your own situation and your own specific facts. And everything in tax is extremely kind of facts and circumstances specific. So that's why in addition to kind of getting a big picture thoughts on how some of these issues work, why it's really important to look at things from an individual perspective and get individual advice as well. So I think we got some slides. Danny, are you managing those? Can we crank those up?
Yes, indeed.
All right.
Everyone should be able to see on their screen we have some slides here. This is all created by Ryan. I took a look at them beforehand. Really good. Really good. There's some really good advice in here. Or I'm sorry, not legal or tax advice. Good information that you can do with it what you will. This really is just kind of like a starting point, I think,
Yeah.
for people.
Thanks,
So
Danny.
would you like for me to go to
Yeah, go ahead to the next one.
All
So,
right, here we
and
go.
just an overview here. So this is just on the federal side, right? So taxes are going to come at you from a lot of different directions. And we're going to talk about that a little bit. But the focus here is really going to be on federal taxation. And specifically, we're going to focus mainly on income tax because that's the deadline that's just a couple weeks away. And that's the one that obviously gets the most attention and that has the most potential to kind of go up and down. Estate tax is something that hits you at the end of your life. Hopefully, if you're lucky enough to have an estate worth over $12 million, or if you're married, $25 million. So not a huge issue for most people in any given year. And then, these other two issues that I put on this slide, self-employment tax, net investment income tax, these are things that kind of wrap into your tax return in a couple of weeks. That's due in a couple of weeks as well. Self-employment taxes are not income taxes, but you pay them at the same time, basically. And basically, that's just, if that's the equivalent of your Social Security and Medicare taxes if you work for yourself instead of having a job with an employer who withholds those taxes for you. So one of the biggest surprises people get, especially in like things like sports cards and other businesses that they start up or they're operating themselves, is they're thinking, all right, well, I'm like in a 20% tax bracket or something. Well, actually, you're going to get whacked with self-employment taxes as well. And those are 15.3% of like the first $180,000 you earn or something like that. So self-employment taxes add up really quickly. And they, if you don't plan ahead, they're gonna create a big bill for you at the end. And then the net investment income tax, that's not technically part of the income tax, but essentially if your income's over a certain level, like, I think it's around $250,000 or so, this kicks in on capital gains. So if you sold cards for a significant gain, whether it's like short-term or long-term, this is going to add an additional almost like 4% to the tax that's owed on those. So it's coming at you from a lot of different directions, but those are the basic federal taxes to think about. And then, Denny, you want to jump in? Denny, of course, jump in with any point. I'm just going to keep.
Man, I'm going to be. I
But
will be absorbing the information that you're sending our way.
yeah,
One thing I did want to ask,
yeah.
and this isn't about sports cards and taxes, but going back to this first slide about, you were kind of talking about the income taxes and the brackets. We're not here to give any legal or tax advice, but factually, just talking like facts, we in America, and again, this is, maybe I should have said who this might help and who this might not help. Anyone outside of the U.S., this really won't help, right? We're talking about the United States federal tax system. We're talking about, people who are engaged. Again, we're going to get into the whole hobby for profit, intent and all that. But when it comes down to it, if you don't sell cards, if you are literally a collector, you are someone who loves to just buy on eBay or buy at shows, and you just like to collect, and you've like really never sold a card, or maybe if you have sold a little bit, which again we can get to in a little bit, this isn't for you, right? I mean, this is for people who want to make this into a main business, side business, some type of transactional side of the hobby, and within the United States of America, right?
Yeah, that's totally right, Denny. Although I would say as a collector, you're accumulating something of value. And so you need to be thinking about what's going to happen with that when either you do sell it or you gift it to somebody or you die and you pass it on to your heirs. Those all have tax consequences. So yeah, if you're not selling anything, there's really nothing to tax. But
Right.
if you're just a collector, but you are accumulating wealth. And so the government's going to want a piece of that at some point, most likely.
I hope we're all accumulating wealth. I hope these cards aren't going to zero like a lot of not a lot, but there's some think piece people out there who are trying to argue that ultra modern as it's going to all go to zero, which I don't really believe, but that's a whole nother story for another time. We do in the United States of America have, I hope I get this right, it's like a progressive tax system where, like, some people, and again, just dispel this myth, some people think if you make a certain amount of money, all that money is going to be taxed at like that higher tax bracket. That's not true, right? I mean, let's just kind of get that out of the way.
Yeah, absolutely. So you may pay a high tax rate on your last dollar you earn, but your first 100,000, 200,000, 300,000, whatever, is going to be taxed at a much lower rate. So it's like your tax rate ramps up as your income grows. but it doesn't go back and claw back and tax you higher on the first dollar. It's just your rate goes up on the last dollar you earn. So
and so I'm going to turn it over to the next slide, and I'm going to go back on mute. But I did want to say some countries, and the reason I say this is because the United States, we have such a complicated tax system that there's so many general rules and exceptions and nuances. Did you know? And I didn't even have to look this up in anticipation for this particular episode, but I found out years ago that in Japan, the government literally sends out the tax form in like almost like a postcard. That's what I'm trying to say, postcard, and you just kind of check some boxes and you send it back to them, and then that's it. That's all they have to do. There's not hundreds of pages, different forms, and all these the intricacies and complexities of the United States federal tax system. So I just want to say it could be easier. I think that, again, nothing against the people who lobby and make it the way it currently is. I just feel like it doesn't have to be that way. But yes, we have to operate within the realm of reality, which is like we have to do this.
Yeah, Danny, that's a really interesting point. I would say, most all European countries, they do your taxes for you basically, and you get like you said, a return at the end of the year, and you basically, I think you sign it, or maybe do some small stuff, but for the most part, they're doing it all for you. I don't think that's necessarily a good thing because
Oh, it isn't. Oh, in case they do something wrong.
Well, yeah, I mean, you're basically kind of over a barrel at that point too, because they've withheld the money from you throughout the year, and then they send you a thing at the end of the year that says, "Hey, this is what you owe."
That's true.
So here at least, there's a lot of things we can do, and we're going to talk about them: tax planning, tax strategies, tax stuff to try and minimize taxes as much as possible. So yeah, people complain about the complexity of taxes, but can work to your advantage.
Pros and cons. Yeah. Absolutely. Okay. I'll stop talking. Next slide. Here we go.
Oh, good. So yeah, this slide's just I said that taxes come at you from a lot of different directions. Federal income tax is just one of them, state and local. Most states have an income tax. Just about all of them have a sales tax. I host shows, and in Maryland, I pay admissions and amusement tax for every person that comes in. It's like an excise tax. I think it's like 7% on ticket sales for people coming. And it's actually applied whether or not there is a tax that kicks in even if they're not paying for their tickets. So they come at it from that way as well through these excise taxes. And then business registration, that's not really a tax so much, but I think it's very important for sports card collectors because a lot of people are creating LLCs and entities for business purposes, and to get things like reseller certificates so that you don't pay sales tax when you purchase online, but there's costs associated with that in terms of just annual registration fees and things. So I kind of group that in with taxes too. I'm not going to spend any more time on this state and local stuff, but just wanted to highlight it.
Absolutely.
Yeah. So this has been really interesting. One of the things that has jumped out kind of doing this research on collectibles is that the Congress, the federal government, it really kind of frowns on collectibles as an asset class. So I wrote here kind of the headline: collectibles second-class citizens since 1981. And basically what happened in 1981 is Congress said you cannot include sports cards and it didn't say sports cards. You cannot include collectibles in an individual retirement account. And then they said that they were concerned that it was diverting retirement savings into collectibles that do not contribute to productive capital formation. So my only point here is that there's a bit of a bias in the tax code against collectibles to begin with. So and that kind of goes back to it's been around, that issue has been around for a while. And so that's something that we just have to kind of deal with in the hobby, is that it's not perceived as something that's contributing economically in the same way that other businesses and activities do. And then fast forward to 2017, so the big tax bill, first year of the first Trump administration. Generally, people think that this was just a massive tax cut for everyone, except as my headline here says, except for the hobby, right? And this is very underappreciated, but In 2017, Congress repealed the personal deduction for hobby expenses and hobby losses. That's not the technical term for it. It's called the miscellaneous itemized deductions. But basically, that includes all of the kind of deductions that one would take for activities that do not really constitute a trade or business or something you're engaged in for profit. So you used to be able to deduct all the kind of costs that go into participating in the hobby, at least against your hobby income. And up until 2017, you had to do that. It still had to cross some thresholds. It had to be more than 2% of your income in order to deduct those miscellaneous itemized deductions. But it definitely for sports cards and hobbyists, and not just sports cards, but really anyone that's kind of engaged in like that kind of collectibles, different types of collectibles. The 2017 tax bill was a bad deal in that way, at least. So,
oh man, we we should rise up. Second class citizens. How dare Congress do that to us?
I will say this, that expires. Well, first of all, I think everyone thinks the tax cut, the big tax cut is going to be extended. But if it didn't, that would come back. So in theory, if everything got bogged down and they weren't able to extend the 2017 tax bill, the deductibility of hobby expenses would kick back in 2026. So I just thought that was kind of, interesting.
Well, Congress and bogged down. I've never heard those two in the same sentence ever.
Right.
All right. So should I go to the next slide?
Yeah, sure.
Okay, here we go. Oops.
Okay, so I said that collectibles are kind of like a second-class citizen in the tax code, and for that reason, Congress subjects them to a higher top capital gains rate of 28%. As opposed to other types of investments, stocks, bonds, and stuff that has a top capital gains rate of 20%. So, capital gains tax is basically, not the income you earn from operating a business. It's the income you earn from holding an asset for a period of time, kind of like as an investment or for appreciation purposes. And there's lots of different things people hold that they hope and expect to appreciate. But collectibles are taxed at a higher rate. So it's not really a big issue if you're not in a really low tax rate, because your ordinary rate will kick in first. So if you're at a lower rate, if you're below 20%, they're not going to push you up to 28. They'll leave you at the lower rate. But if you are in a higher tax bracket, then you're subject to a higher tax rate on collectibles than other investments. And so this bottom line is just, these are what the current rates are on like your job, on your wages and ordinary income. There's a 10% bracket, 12, 22, 24, all the way up to 35. So, and those change over time. That's where they were set most recently in 2017. Yeah.
I'm glad you said that, because I was going to ask. So those are percentages, and that goes back to what we're talking about with the progressive tax system, where your first, again, I don't know what the number is, but you're not taxed at 35% the entirety of your income if you feel like you reached the next tax bracket.
Yep.
Okay. All right. Sounds good. I will move on to the next slide.
Yeah.
Before I do, there's some good banter going on in the comment section. I read it all, but I'm not uplifting any of it, mainly because this is kind of like thank you so much for the people who are commenting. It's just that I should have said this. This is not like the hobby hangout per se, because we're not bringing people on screen. We're not going to be doing too much of like the silliness. This is kind of like, again, kids can be here if they want. I'm not your parents. The thing is, I won't be bringing up anyone up on screen, and I won't be uplifting anything that doesn't have to do with this particular topic. But if you do have genuine, real questions, I'm glad to bring them up.
You do have a following there, though, don't you? You've developed. I've watched it grow over time. The Snickerdoodles community, Denny.
I I don't know if you should or should not say that, Ryan. I cannot
What?
advise you either way. I don't know what it is either.
Oh,
It's just
okay. I didn't even realize it had other meaning. I
I
guess
don't
I'm.
know.
Yeah. Okay. All
It's
right.
language evolves just as quickly as this federal tax system. I don't understand what's going on.
Okay.
So, all right, I'm gonna go back on mute. Let's go to the next slide.
Yeah. Yeah, so they don't actually include sports cards explicitly in the definition of what a collectible is. It does refer to any work of art. So, some people say a card is a work of art. It does refer to an antique. So some people say, well, if you got a really old card, that would qualify. But there are people that take the position that sports cards, certain sports cards are not collectibles. And so it's not a from what I have seen, there are smart people taking both sides of this. I personally think to make. I mean, look, my business is called Mid Atlantic Collectibles, so I'm not going to say that I'm not dealing with collectibles. But technically, the tax provision does not specifically refer to sports cards, and it is considered an exclusive definition. So the categories that are in that definition doesn't pick up other stuff unless the Treasury issued regulations, and they've proposed regulations, but they didn't do final ones, and sports cards have never been picked up. So, I mean, no need to really spend a bunch of time on this other than to say, like, there is a debate out there, and reasonable people are coming to different conclusions about whether sports cards are collectibles or not. But I think if you have something that is clearly aesthetically pleasing card, you could call it a work of art. If you have a really old card, it's called, might suggest it's like an antique. And so I think the safest thing is to treat cards as collectibles.
Yeah. So here, my tongue-in-cheek 2 cents will be that there are definitely some cards that I see as beautiful works of art, beautiful contemplation, curation, kind of like real artistic meaning and expression. And it doesn't have to be like court kings, or it doesn't have to be like works of art type of thing, but some cards are just more beautiful than others. And then you just have some, and it doesn't have to be like base cards versus one of ones. It's more like you can really tell, or I can really tell sometimes when whether it's the card manufacturer or what have you, some cards really just pop out. And then there's some that just look like absolute, like, there's Photoshop background. There's like a lot of people. One example, the Victor Wembanyama rookie Prism card. To me, it's such a bland. It's like toast. It's like there's nothing to it. It's just a black background, curtains with him in the Spurs uniform. What? And again, it doesn't have to be licensed, unlicensed, but to me, it's such a basic card.
Yeah. So this is a veer off track, Denny, but do you have an opinion about things like Project 2020 and Project 70 and like these art cards?
Great. Yeah. I mean, I think that I've never collected any of them. My short answer is I think they're really cool. There's something for everyone, and there's certainly some great card artists out there. The tops now. I think Chuck Styles created the LeBron James one where he scored 40,000 points. I bought like 20 of them, and I just thought they are. He hand drew it, and it's beautiful. And there's some very, very impressive people out there with super talented things. That said, some people, when they create their artwork, unless it's picked up by a card manufacturer, like they're kind of like card art, like they're custom cards. They're like not pack pulled, right? Like shout out to Tommy, the card carver, but he doesn't have, like, he handcrafts, creates each card, as opposed to it being like an actual trading card that could be pulled from a, even like say a Project 2020, which I hope he does do that type of project. But yeah, I mean, there's so many little, as you can tell by my answer, there's so many like exceptions to the exception stuff.
Yeah. Yeah, I don't know if you remember, I brought in a sketch card artist to this Mid Atlantic show, and I've learned that this is like a really popular thing, is they do these one-of-one sketch cards and then insert them into packs and stuff. And there's a ton of these people that do these cards. I don't think they get paid very much to do it, but some of them, become very popular and, have pretty good values associated with them. I just think they're very cool, but it's a big, I think, like, I know about them in Star Wars. I think they're in like other things like Marvel and stuff like that. I don't know about trading card games, but
Not sponsored by Saturday Morning Cards, but hey, shout out to them from 2 weeks ago. They do have one of one sketch cards. There are people who do the sketch. Like I've met some great card artists. I've mentioned Tommy, Chuck Styles. There's also like Sunday Andy Friedman, and I hate to say even more because like piggy banks with his. The people who collect piggy banks, they think absolutely, even though it's not pack pulled, like those pieces. He doesn't even like to call them cards, I think, but like they fetch 4 or 5 figures US dollars. I mean, it's absolutely incredible.
Yeah, it's cool.
Yeah.
I like them a lot.
Yeah, very impressive. Shout out to all the card artists out there, just making some beautiful artwork. Really, absolutely. So, all right, so we're gonna go on to the next slide here. Thank you for the people in the chat as well. Nothing to uplift so far. That's about this topic. I'll say that.
Okay, I mean, here's the key issue really for collectors, hobbyists, people in sports card business. Are cards for you? Are cards a hobby or a business for you? And the basic core question is: are you doing it for fun? Or are you doing it, or are you doing it for profit? But of course, for many of us, we would say we do it for both. And so then it becomes this is going to become a really important question that I'll kind of explain why. Well, reasons why it matters, you can see on this slide. Business expenses are deductible, and hobby expenses are not, as we kind of talked about, especially post 2017. Business income qualifies for additional breaks. In particular, it's called Section 199A, which is basically, corporations got a huge tax cut in 2017, and small businesses were kind of like outraged. Hey, where's our break? And so Congress at the same time gave this deduction 199A to small businesses, self-employed, partnerships, LLCs, et cetera. And it's basically wipes out 20% of your business income. So it was done basically to kind of provide some parity with what corporations were getting. So you only get that, you wouldn't get that for your hobby income. You'd only get that for your business income. But as I kind of started out with back on the first slide, business income does subject you to self-employment taxes, and those are big. So there's no deductions from self-employment taxes. They kick in on the first dollar you earn. There's no like standard deduction or credit against them. You basically pay 15.3% on your self-employment income up to a certain amount, just like you would on your wages. You pay your payroll taxes for Social Security and Medicare. It's the same concept. So that's why this question is why people focus a lot on what am I just in the hobby, or do I have a real business here?
So I will say, kind of again, half kidding, tongue in cheek. As soon as you started saying payroll and Medicare, Social Security taxes, I saw the viewership number drop by just one. But it was funny. I saw I thought it was like coincidental. No, thank you to the people who are watching this live. I will try to make it live. No, I will try to make, at least on my end, it replayable on podcasts. So you may be listening to this on Spotify. Some people reach out to me saying they like the live, but they can't really catch it on Spotify. Like unless you have a YouTube Premium membership, you can't watch it like in the background while you're like driving or at work. So they do like it on podcast. So I am going to try to put this up on podcast form. That said, a lot of the information are on slides. I think Ryan's doing a great job of reading what's on the slides for you to be able to follow along without having to have the visual aid. But yeah, like this is a really interesting slide to me because that first question is so important. Are cards a hobby or a business or both? And then I think that's like very important. And then the second part is kind of like a little bit more harder to digest because, in my head, I was like, wait a minute, is 199A, is that like a typo of 1099? But it's not. It's its own separate thing, 199A, because I'm so familiar with Form 1099. Which is what you would get again, like if you hit a certain threshold in eBay, PayPal, and electronic payment systems and things like that. So, but I'm learning here too. 199A is for a 20% deduction. Again, all factual information, not tax advice. I'm so sorry. I feel like I have to keep saying that.
Yeah, and Danny, 199A is the tax code section. So that's
Tax code section, yeah, not a form. Yeah, tax
right.
code section. Got it. So business income subject to self-employment taxes 15.3. Why is it 15.3? But then again, why is anything point anything to the 10th digit, I guess. So, you know.
Yeah, I mean, I can tell you where that comes from, but I really put our audience to sleep probably. But yeah, I mean, basically, you pay every paycheck you get for your job, you pay 7.65% in payroll taxes, and your employer pays 7.65, and combined that comes out to 15.3. Yeah. And we could break that down even more. 6.2 is Social Security and 1.45 is Medicare. But now I'm really.
But it's so amazing how so amazing how they get down to the 100th decimal point, not even the 10th. Like we're talking like 6.25. I mean, it's like so. Again, I imagine it's because people are so hesitant to see tax tax hikes or increase in their taxes that when they set these numbers, I'm sure there's a very intentional, very good reason as to why they didn't just pluck it out of thin air. But I know people are very sensitive to taxes, the price of gas, the price of eggs now, right? I mean, everyone is so, when it comes to these certain particular things, I think people, we all collectively kind of like our hairs go up on our necks because it just immediately, we kind of, it's almost like a shock to our systems.
Definitely.
All right. Should I go to the next slide?
Sure.
Okay.
Okay. So yeah, now we got to get into, this is the key, like we said, this is the key determination. Are you in the hobby or do you have a business? And the IRS Act tells you exactly what factors it's going to consider. First of all, it's not a bright line test. There's like 9 different factors that the IRS says they're going to consider. And those factors are going, and they're subjective, and they're like, some of them are, what's your intent? Is your intent to make a profit? I mean, these are like, how do you prove that? So, but these are the things they're looking at. And then, I'll kind of go through these quickly, and then I'll tell you my view at the end of the day, what's kind of the most important thing. But, are you carrying out the activity in a business-like manner? Are you keeping books and records? Are you keeping track of the money coming in and money going out, and exactly what's going into the business for you? That would suggest that you are a business. Do you put time and effort into the activity to show that you intend to make it profitable, or are you just throwing money at it, not spending time on it, and potentially in losing it? So, is the taxpayer? It depends on the income from the activity for their livelihood. So. That's kind of self-explanatory. Are losses due to circumstances beyond the taxpayer's control, or are they normal for the kind of startup phase of their type of business? And there is a change to methods of operation to improve profitability. So basically, well, let's do the next slide too, and then I'll kind of sum
circle
up
back.
This whole debate. Yeah,
sure thing. Because I have a lot of thoughts on this slide.
Yeah.
Here we go.
These are the other, actually I got 10 here. I said there was 9, but the regulation I was reading had 10. So taxpayer and their advisor have the knowledge needed to carry out the activity as a successful business. So, are you, do you know what you're doing? Do you putting in the time and to develop the knowledge to make money at the activity? The taxpayer was successful in making a profit in similar activities in the past. Activity makes a profit in some years, and how much profit it makes. So, I'll get to that. The taxpayer can expect to make a future profit from the appreciation of the assets used in the activity. The taxpayer has personal motives for carrying out the activity, such as general enjoyment or relaxation. So that second part of that, suggests that it's more of a hobby than a business. Yes. And then lastly, the taxpayer has enough income from other sources to fund the activity. Look, what the tax system and the IRS are getting at here is they don't want you to characterize what you're doing as a business so that you can use it as a tax shelter and generate losses that you can then apply against the other income. I mean, that's what this comes down to. So that they're trying to determine, are you actually, I think, in this engaged in it to make a profit? And are you trying to make a profit? And are you moving towards making a profit? Do you have a profit in some years or not? Or Is this more of a tax shelter and a tax game to, or to generate deductions for things like trips that you're taking and meals that you're buying and other stuff like that. That's really what they want to know, that if you're just repeatedly every year generating losses, they're not going to respect that as a business that you are engaged in for purposes of making a profit. It's basically my conclusion. That's how I have kind of read these points in cases, and kind of that's the kind of conclusion I'm reaching from these different factors. But go ahead, Danny.
Oh no, so I'm kind of toggling back and forth between these two slides because they have all the factors. If people want to screenshot them or whatever, please feel free. This is very good information by Ryan. And so again, these are straight from the tax code. You can find this on, what is it, irs.gov also, or like, I don't know, Google it and all that stuff, right? I think I know the answer to this question. And I want to tread lightly because I don't want to veer towards tax advice, but I was wondering, and I think the answer might be no, and it's a gray area, but is there a certain number of years for you to not turn a profit where the IRS is like, hey, you know what? It's been long enough, buddy. Like, we thought you were in it to win it, but you are just, man, you are taking losses.
Yeah, so great question. And there is something called the presumption period, and if you generate, I'm gonna not do all the specifics on this, but basic concept is, if you generate a profit for 3 out of 5 years, then you get basically a presumption that the IRS would have to disprove, rather than you having to prove you're in a business. They would have to prove you're not in a business. And you can basically get this 5-year period where, as long as in 3 of those 5 years you're demonstrating that you were profitable, then the presumption is that, yes, you were engaged in activity that was a trader business. And it's really important, because you want to be in the position where the presumption is on your side. And again, I mean, they do that because they're looking at whether or not you are actually showing an effort to make money at what you're doing, rather than generating a tax shelter.
Wow, wonderful! I got a real answer. I didn't think that I would, but it seems like, and that I imagine is information that you've known from the website, and it's not tax advice.
Yeah, no. There's a form you can fill out to get that for that 5-year period. And in fact, like, they won't really even test you during that period till you get to the end of the 5 years. So you can basically fill out a form, and you get kind of a 5-year runway, as I understand it. And then they'll come back and examine your situation at the end of that.
Oh, nice. So I imagine a lot of startups, or whether it is cards or food or tech or whatever it is, the most losses or the most business expense will be coming in the front end of those 5 years, year 1, year 2, and then maybe you start turning a profit. So it can be any 3 out of those 5 years. Like, it can be some amazing, I don't know what it is, like an angel investor, or maybe not, that doesn't even apply in this case, but maybe you just knock it out of the park and you start making income, and you derive income, more profits and losses. But then maybe near the end of 5 years, you can, maybe you're buying more, you're buying more active inventory and all that stuff. But I would imagine for most people, it is the beginning part is where you're going to incur the most expenses, I imagine.
Yeah, I think that's right.
Yeah.
And just to be clear, I mean, you don't have to have a profit in 3 of 5 years. Doesn't mean you're going to fail the test. You could, if you can prove that you're working really hard and there's a lot of investment costs up front, but you're headed toward in the right direction. And I think you can still, prove that you're in a business. It's just an easier way, I think, to go about doing it. If you're clearly profitable in those 3.
Awesome. Thank you, Ryan. And also, I did want to note one thing. Again, there's some people who are in the chat. Thank you so much for being here. there is a difference between just being a sports card, say like vendor or seller, and then like there's this whole other aspect of the hobby where you're like a content creator, which I'm more of. And I gotta say, there is a whole difference with that because there can be expenses incurred with, equipment and like, including like the StreamYard account, like having this, $20 a month. Like there are expenses, and then there's the income derived separately from sports cards for me, where if I get a sponsorship or affiliate money and things like that, that's totally separate from the sports card. So I did want to say, I mean, it can get really tricky when you're doing both. And for some people, for the vast majority of people, I imagine this really is applicable towards the people who are like, transacting in the without making content out of it. So I did want to say that, because in the back of my mind, I'm definitely thinking that aspect of things.
Yeah, Danny, to your point, there's a whole set of questions about, can I combine these activities? So is my content creation and my selling cards and my hosting shows, is that all one activity, or are those three different businesses? And what I've concluded from looking at this stuff, because I've looked at it from the context of a show promoter, and can I group all this different stuff I'm doing together, is that they're pretty flexible. I think my sense is that the IRS is pretty flexible in terms of grouping, if it makes sense. And so generally, and I think generally you're going to want to do that. It's probably going to be in your interest to kind of have it all aggregated together. Not always necessarily, but like in your case, I think it would all of your hobby activities would be like one business.
Right. So long as I'm not veering into the food vlogging and the mukbangs and the travel vlogs, I guess. So I'll keep it about cards.
Yeah.
Okay, awesome. Should I go on to the next slide, or
Sure.
should we hang linger a little? Okay, here we go. Here's the next slide. I'll go back on mute.
Yeah. So still sticking on hobby versus business. So interesting. I looked at some of the court cases in this area. And the presence of personal pleasure or recreation from an activity may indicate the absence of a profit objective. But, and this is a quote from the case, a business will not be turned into a hobby merely because the owner finds it pleasurable. Suffering has never been made a prerequisite to deductibility. So point there is that you can enjoy being in the sports card, doing sports card activities, and that doesn't mean that you're not a business, that you're a hobby. The IRS understands that, people, I think they understand that you go into activities because you're interested and you enjoy them, not exclusively for the profit aspect of it. And then the second quote is from another case here. And, we were talking about the startup stage. The fact that a taxpayer incurs a series of losses beyond an activity startup stage may indicate the absence of a profit objective as to that activity, unless the losses can be blamed on unforeseen or fortuitous circumstances beyond the taxpayer's control. So, basically, I take from this, there's more leeway kind of in those early startup periods, but, to continue to have a complete absence of profits going forward, unless there's just like some crazy circumstances beyond your control, that's going to raise red flags with the tax system.
So I feel like the tax court is bearing into my soul here about card collecting and prices. Suffering has never been made a prerequisite to deductibility. Oh my goodness, suffering. Yes, yes, the yin and the yang of the hobby, just the love and the hate we get. I do want to ask about this unforeseen or fortuitous circumstances. Like, are there some examples that the tax code or the IRS gives as to examples of what that kind of means? Because I'm kind of curious about that part.
I haven't seen. I mean, they probably are. There probably are some in case law and stuff like that. I mean, I would think it would just mean, if this is, like a hurricane or something. I mean, it's just kind of the kind of things that wipe out your business. That aren't because you were doing the things incorrectly or wrong, but because of external events outside of your control. So
we're not talking about like market, like pump and dumps and market fluctuations. Like I kind of asked that tongue in cheek a little bit, but like, yeah, I'm just kind of wondering, like, we know that cards go up and down all the time, right? And there are, people lose their shirts, like injuries to star, like prospecting, how much money have people lost on Mac Jones and Bailey Zappi, right? Things like that.
Yeah, I mean, I think to some degree bubbles are expected, and people, I don't know that they would treat just
Foreseen. They are
a bubble
foreseen.
as an
Yeah,
unforeseen and fortuitous circumstance. I think they
got it.
would, say, of course, there's going to be bubbles and like crazy assets like cards and collectibles. I mean, they don't have any intrinsic value in and of themselves. They're just kind of worth something because we say they're worth something, really, kind of.
Man, I would love if the tax court came out and said in like a 2024, 2025 decision, Mac Jones was a terrible investment, or like Mac Jones is beyond the taxpayers' control. He is a terrible, terrible player, and the people who are still trying to see if he can play. I think what is he on the Niners now? Oh my goodness! Like if people are holding on to Mac Jones thinking that he might do something if Brock Purdy goes down, wow, I don't know. Maybe he
He
has
just
something
got
in him.
he just got a little lift, didn't he?
He did get a little lift in
No,
value.
I thought I saw that someplace that his cards got a little boost or something.
Oh yeah, I imagine it's because he left the the shadow of Tom Brady, and I think he's in the Niner system. I could be wrong about that because I'm not like 100% sure on everything football, but yeah, I'm sure he's a backup quarterback in a different system, and maybe that people think that that portends that potential for something to happen next year.
Mm-hmm.
So. Well, tax court, thank you so much for those wonderful quotes. Should we linger on this one or move on
No,
to the
go
next?
ahead. Yeah.
Okay, here we go.
Yeah.
Next slide.
Okay, so sticking with this hobby versus a business, I thought this one was really important. So because I think this is one that a lot of people can relate to, which is building a collection while occasionally selling cards is not a business. At least in this specific tax court decision from 2001, the court held that the activities of a taxpayer who collected sports memorabilia, and he did this, I believe it was decades, hoping the items would eventually appreciate in value, selling only a few items sporadically, basically continuing to amass a larger and larger collection over time. That did not rise to the level of a trader business. So, yeah, I mean, I think that is something that a lot of people can find themselves in. They are collectors. Maybe they will sell a card here or there, but their collection just kind of keeps growing on them. So
I could see that being a very interesting that operative word being occasional selling, right? So it's like occasional. What is occasional? I'm sure there's a lot of leeway and there's a lot of people who are going to argue it both sides.
mm-hmm.
One question I have though is because when I think about occasional, I'm thinking temporal, like time. It's like, the number of times you sell a card. But then again, so that's one way to look at it. But then the other I think about is that threshold, right? That the ever-changing threshold between 2024, 25, and 26, where it's going to go. I think the numbers are 5,000 to 2,500 to 600, right? So what if you sell a card? What if you literally sell? So Ryan, again, not tax
Mm-hmm.
advice, but just a hypothetical out there, just throwing this out there. What if you sell one card the entire year on eBay? You're building a collection. You're a rainbow player set team collector, but to fund the hobby, instead of consigning with a consignment firm, and I'm not going to name any of them because they didn't sponsor this, but instead of going with someone to consign, because some people do that to avoid the whole taxes stuff, but let's say in your own personal eBay account you sold one card for $3,000. That meets the threshold for for $2,500. Let's say you sold one card for $10,000. Would that I think that would trigger the 1099. Maybe it won't. I don't know.
Yeah, we'll get to that. So the reporting by like the online payment marketplaces and stuff, that's kind of changed over time and it's continuing to change. But I mean, I guess the honest answer is I don't know. But
Yeah.
my guess would be that they're going to be primarily focused on what is your situation this year, what's your situation the year before, what's your situation next year, and in that year, did you have more income than expenses? And if that was one sale, maybe that's fine to be just one sale as long as your expenses were underneath that amount. But what I don't think they're going to like is if you're trying to, deduct a trip to the National that's $10,000, and you have one card sale for $3,000, and you're trying to say that I'm in the sports card business, therefore I'm going to deduct my $10,000 trip to the National or something. So that's where I think I really think it comes down to, like, at the end of the day, how is this all kind of add up on an annual basis? Am I looking like I'm actually trying to make a profit on a year-to-year basis or not?
That's a really interesting insight. Thank you for that. Really appreciate that. Yeah, for sure.
I mean, I don't know if it's right.
Oh no, there's no right or wrong. This is not advice. This is not tax advice. We're just talking. We're just two friends talking about the tax code. For people to kind of view. I gotta say, no questions in the chat. Again, I wrote this in the chat, but I see that all the kids have left. There are people watching. Thank you for the people who are here, who are watching live. But it is funny. I do not see the kids in the chat talking about all the things that kids talk about. So we have successfully weeded out the under 18 crowd, I think, with this. But hey, there could be some kids.
I mean, I'm not even going to say the word because apparently it may have some dual meaning. I don't know. So,
the cookie, a sugar cookie with cinnamon in it. Yes, we don't know what that really means, but that crowd is gone. The cinnamon sugar cookie crowd. So we got the hobby versus business. Again, intent is really important. What you just said is so vital, is like, just because you sell one card, you might go over that numerical threshold, but what are we talking about here? Like, are you really trying to make a profit? Like, are you in it to, I'm just keep saying in it to win it, but are you someone, kind of going back to this because I do have control, are you carrying out this sports cards activity in a business-like manner? And are you maintaining accurate books and records? Just one of many factors. The only reason I'm even reading that one is it's the first one, but I like that one a lot because the business-like manner is interesting. So, all right. So should we move on to this slide right here? This slide. All right.
Yeah. So I think this is important because I saw some inaccurate information on this online. And I actually spent a long time trying to drill down and figure out what the right answer here is. So suppose you're not in a trade or business, you're just a hobbyist, and you need to report your hobby income at the end of the year. What do you actually report? Well, you can't deduct the cost of traveling to conventions. You can't deduct the cost of buying a table if you're dealing at a show. But you can still, and I think this is a little bit underappreciated, you can still deduct the cost of goods sold when calculating your hobby income. So this is from the actual Treasury regulations. The taxpayer may determine gross income from any activity not engaged in for profit by subtracting the cost of goods sold from the gross receipts, so long as he consistently does so and follows generally accepted methods of accounting in determining such gross income. So I think there's a lot of interesting questions here that I haven't really run to ground, but I'm going to kind of continue exploring. What exactly can you count in your cost of goods sold? So obvious one is grading, right? So I get a card, open it up, get it raw, send it in for to be graded, and comes back in a slab, and then I sell it that way. I'm going to go out on a limb and guess that grading costs can be factored into the cost of goods sold, but I don't know that for a fact. You've got fees associated with selling online or consigning or auction houses or whatever. I'm going to guess that those are part of the cost of goods sold. Again, I'm not sure of that. It just makes sense to me. What I take from this regulation, at least, is that consistency is important, and that you are what you are doing, you can explain, and you're doing it on a consistent basis. But there's more questions. I think this point here almost raises as many questions as it does answers. But there's a lot of people out there, both online and in writing, who are basically saying you can't deduct anything from your from your receipts, and that's my sense. That's not true at all, because you can basically deduct your cost, your basis that you had in the card at the end of the day.
Yeah, you and I haven't talked about where like you sourced like what research you've done, but I totally take you by your word when you say there's conflicting information. It does make me wonder if those people who don't think that the latter audience that you're talking, or the latter sources, whether they do even know about grading, because grading is such a card, I guess, not just cards, because there's also, you can also grade magazines and coins and ticket stubs, but you know you don't really see grading in, oh gosh, I hope I didn't trigger something, like jerseys and hats and signed sneakers. So I wonder if people are kind of behind the times who say, oh, you can't subtract, like, again, I'm sure they didn't say specifically grading, and you said you're not entirely sure, but it does make me wonder if people understand and appreciate the actual costs associated with the sports card hobby.
Right. Yeah, and I think this term cost of goods sold, I mean, there's a lot that's a term that gets used in a lot of different places for a lot of and so it's a well-developed term, but in every industry, in every activity, the cost is goods sold, maybe different factors that go into it. Other industries wouldn't have grading. So but I think just on its face, the cost of that good which I have sold includes not just the cost of buying it raw, but includes the cost of grading it. Now, I don't think I could like deduct the cost if I sell it on my website. I don't think I can deduct the cost of my internet service provider and my website creator and all those costs and things. That to me just feels like a little bit far removed from the actual card itself. But some things feel very close to the actual card, and I would put grading in that category, and commissions, and put costs. But again, this is and I think this is something that we'll see if anyone has comments on this kind of following after the show or not.
Yeah,
but I think it's
no,
worth.
we have our first non cinnamon sugar cookie related question, and it is from Austin. Thank you so much, Austin, for this question. I'll read it out loud for the audience. What about if you buy raw, then grade, and then flip on eBay? How do you factor all of that?
Yeah, well, I think great question. I think it goes exactly to what we were just discussing. I think that first of all, your income is what you sell it for. So I think that you start there. Your gross receipts is whatever you sold it from, and then you figure out, all right, what can I take out of that sale? And we were just saying, I think that you take out the cost of the raw card. I think you're going to take out the cost of the grading, and I think you're going to take out your eBay fees. But to be quite honest, I think this is, I'm not the authority on this, and but that's my sense, and I'm definitely going to spend a little more time exploring that question.
Yeah, absolutely. Thank you again, Austin, for that question. So, should I go to the next slide?
Sure. Where are we?
Okay.
Okay. Yeah. So a lot of focus on 1099s and hobby. People get very excited about this term. 1099s come at you from a couple of different places. There's the 1099K, which is the information return that you get from the PayPals and the platforms, online marketplaces, eBays of the world. And then you also can get 1099s just from other sources, if you're providing services and they need to they've compensated you for that. And if that compensation is over a certain amount, that's going to be reported in a 1099. The 1099 does not determine whether or not you owe taxes or not. You may very well owe taxes even if you did not receive a 1099 on a sale. All the 1099 is an information return that's going to not just you, but the IRS to basically help the tax collectors with compliance. So they're going to receive a copy of that. You're not the only one receiving it. The IRS is receiving it, and they're going to know that this individual received so much in income in payment volume. Is, I think, the term that's used. And so these numbers have changed quite a bit over time, and there has been some relief that was provided because it was going to go down the threshold, reporting threshold significantly. My understanding of where it has landed currently is that for 1099s from the online marketplaces, they are required to report if they, paid out over $5,000 to a individual or a business in 2024. The threshold's dropping lower, 2,500 in 2025 and 600 in 2026 and thereafter. And it was going to be 600 a lot sooner, but there was, I think, a bit of an uproar over that. This is important. This does not determine your liability, but it is, it is the information reporting system that greatly facilitates and is very important to compliance. I would never tell someone that just because you don't receive a 1099, you shouldn't report the sale of a car. You should report it regardless of whether you receive a 1099 or not. But that's what's going on here with these.
Thank you so much for that. There's a lot of what did you say earlier? It was like in the beginning, you're like, there's a lot of interest. I mean, this stresses people out. It really does. It's not always bad, but I know that, again, just when it comes to finances, people they don't teach this stuff in school. They just don't teach it in K through 12. They barely teach it beyond that. Again, I'm talking about the US. I don't know how they do it in other countries, but it's so complicated. People's eyes just glaze over this stuff. And I will admit, like, when it's difficult. And so you sometimes you just don't know where to start. And that's why maybe I will put it up in the chat and link it. But if you need help with things like this and you want it from he's not cheap and he's not, you get what you pay for. But the Hobby CPA is just one source that you can go to, and he may be able to maybe answer some questions for free, but sometimes you just don't know where to even start, right? And so this is really good information. Again, just kind of like Ryan, like, I know we're not done here, but you're crushing it. Thank you.
Yeah. So Danny, thank you. Appreciate it. Something to think about with these 1099Ks. So the 1099K says how much money you were paid through the marketplace. It doesn't say anything about the cost of goods sold. So it's basically like the receipts, but obviously you sold a card and you had some costs associated with selling that card. So it's not like I got a 1099 for $10,000. Oh my gosh, I have to, my income is $10,000 more than I thought it was going to be at the end of the year. No, your 1099 is the revenue, and you're going to subtract from that what it is, the cost of what it is that you sold to get your actual income. Yeah,
absolutely. And that 1099 NEC I have as a content creator, I'm glad to say it's almost like, I actually had that in my notes here that I wanted to say. It's almost like it's like the upcharge email from PSA. It's like a double-edged sword. It's like a curse and a blessing. Like, you don't want to get it, but also it means good things. Like the PSA upcharge email, it's that you actually graded, you got a PSA 10, right? And it's like, it means good things. So in this case, at least for me, it's like, wow, I had the honor in a way, and also a terrible thing, but gift and a curse, that I earned enough money through being a content creator that I got a 1099 NEC, where I was able to, and again, if you're an eBay seller, like, that means you actually, at least for year 2024, you sold more than $5,000 in cards or whatever it is, collectibles, to get that 1099K, right? So I think it's a good thing.
Yeah, I mean, well, what's the alternative? The alternative is you don't sell anything. So, no, and for you, nobody watches you and you don't get paid anything. So, no, it's a badge of honor, right? I
Yeah,
mean, you
badge of
want to
honor.
get 1099s from all these places because it means you're crushing it.
Yeah, no, absolutely. So, again, that PSA email, we all, well, again, some people really may have never received it, and that just means, they haven't had the pleasure of getting that, surprise PSA 10 for a card that was maybe like close to the declared value threshold. So, thank you so much. Anything more on the 1099 NEC, whether it's for me or other people to share about?
Not for me.
Okay.
I think we're on the last one, I think, or
Yeah.
maybe.
So
Yeah.
so before I get to the last one, so for someone who's not a content creator, like what are there any examples of what could trigger that 10 to 9 NEC? Because I know you didn't put this in for like me and all that, which I thank you for if you did. But
Um, um, yeah, well, I think, if you're doing autographs, that's a
oh
service,
yeah,
not
yeah, yeah.
a. It doesn't. I believe it doesn't go to someone who's selling goods. It generally goes to a
Services.
service providers. So people that are I don't know, providing consulting services or
Consulting, yes.
brokering card transactions or
Mm,
whatever. I don't know. Uh, what else do we pay people for in the hobby? I'm not sure, but most of what we do is buy and sell cards. But
right.
I'm sure that there's other
So
services.
real autograph signers like Gary Clark and Santana Moss. Not when Denny Cart starts charging $600 per one of one auto. Here the threshold. But no, I totally get it. Those are some really good examples that you just came up with off the top of your head. So thank you for that.
Yeah.
Okay, here we go. Last but not least slide.
All right. Well, this is important, right? So kind of tax strategies for people and things you really need to, I think, be focused on going forward. And one is hopefully obvious, which is just really be carefully track the cost basis. By basis, I mean basically the cost of acquisition for cards, and then what you add to the card too. So put all of that into your cost basis in the card, and that basically is the thing you would then subtract from the receipts from its sale, and it's a lot of work. I have to confess I'm not great at it. But to really maximize and be as safe and careful and diligent as possible, you want to really keep track of your inventory, what you paid for it, what you sold it for. And this is whether the card is investment or
Hmm.
a long-term thing that you're just going to hold till hopefully forever, or it's inventory that you're looking to flip. Either way, the cost basis is very important. So that's one thing. Should Denny, you jump in. I'll keep going on these, but don't hesitate jumping. This is one that I found really helpful, which is maintaining a separate bank account and separate finances. It kind of does the division between personal and business for you. If you basically have two different debit cards for the hobby versus
Mm,
personal expenses, and then if you ever make a withdrawal from one that is personal, you want to make sure that you note that or reimburse it or what have you, so that you know that it was kind of a withdrawal that was not for business purposes. And just keeping separate accounting of, if you want to be in the business and not just in the hobby, how you be very serious about maintaining separate finances. um, Creating a business entity. So I think this is also really important for similar reasons. I know in a lot of cases, to get that separate bank account, you have to create in many states. I think you need to create an LLC in order to create a business bank account. Um, uh, or, and or sometimes vice versa. You need a business bank account to create an LLC. But I think you can also do things like, I said I wasn't going to talk about state and local taxation, but sales taxes. You can get a reseller license. but you generally have to have a business entity in a LLC in order to do that. And basically what that means is if you're buying goods on eBay or other platforms, and you're going to be turning that purchase around and reselling it, you don't have to pay sales tax on your purchase. You would collect sales tax when you sell it, and in fact, that would be done, by eBay for you. But you can give eBay a reseller a certificate, and they will add that to your account, and your purchases on eBay will not be subject to sales tax. There's been, other people have done. I've seen others do pod or videos on this, so this is not a secret that's out there. But it is really, if you're a flipper, I mean, I would consider this critical because it's really going to save you a lot of money. Sales tax adds up pretty quickly, and margins can be pretty small. Consider incorporating. So this kind of goes against the grain. For years and years, people thought, oh, it's a really bad idea to create a corporation. They get taxed twice. You get taxed on the corporate income, and then you get taxed when you take the money out of it. And for a long period of time, I think that was true. But I think the script is flipped on incorporating to some degree today, because the corporate tax rate is much lower than it used to be, and it's way below the individual rate. It's 21%. And the other thing is, you do not pay self-employment taxes on corporate income. So you're not dealing with that 15.3% either. Now, if you're planning to take money out of your business and use it for yourself and personal purposes and things, then you're going to pay a second tax. But if the idea is to build a business and keep reinvesting in the business and growing the business, a corporation can make a lot of sense, because it is subject to a lower rate, and you don't necessarily have those self-employment taxes that you have to worry about. So I encourage people to think about that.
No,
Tax loss harvest. Yeah.
Before we get to tax loss harvesting, I want to say Brandon wrote in here exactly what you're talking about. So in a way, you answered his question, but I did want to uplift it here for others, especially people who are listening on podcast form. He says LLC has a high tax liability. S corp might be more beneficial. Again, that's Brandon and his kind of like opinion. And he says, well, depending on amount of revenue, which is kind of like what you were talking about with, LLC having a higher tax liability. And again, it depends on a person's situation. Brandon also adds, under LLC, you would have self-employment taxes as well. So again, just more to consider, more to think about. And so,
Danny, can I address that?
Please.
So it's a great comment. He's totally right. It does presuppose that you're treating the LLC as basically a disregarded entity that's just like the money's flowing to your individual tax return. You can elect to have your LLC treated as a corporation. So when I create an LLC, single member LLC, generally speaking, I think the default and the most common case is that that money in the LLC is going to go through the LLC to me on my individual tax return, and I will pay self-employment taxes. But that's not required under the tax code. I can check a box and treat that LLC as a corporation. So I don't have to go through the process of creating a formal state C corporation, which is like a total nightmare and lots of cost and legal fees and bylaws and certificates of incorporation and all this crap. But I can create an LLC, which is a very simple little thing, and I can check a box and have it treated and taxed as a corporation. So he's right. If you do treat it as a disregarded entity and the money flows down to you, you do pay self-employment taxes, but you can also do the corporate route.
Oh man, disregarded entities. I am okay. So Brandon, I am going to uplift this, and again, I'm kind of like speaking on behalf of him out loud, and then I want to get your take on this or your opinion. He says, have the LLC owned by your S corp, and you own S corp.
Yeah, so S corps are another option, and it's kind of a little bit of a different beast. S corp, you pay at the individual level. there can still be self-employment taxes in the case of the S corporation. I think that it's a little bit easier to do the LLC route and check the box and have the LLC taxed as a corporation, because you get the benefits, get those benefits, and avoid some of the negative stuff. S corporations are challenged a lot. Like the IRS does not like when they don't pay self-employment taxes. So because there's a lot of money that, I don't know if you, these things like called like the John Edwards loophole, and I think Newt Gingrich loophole, and these people that had S corporations, they weren't paying, basically they weren't paying self-employment taxes. They were treating like all the money that flowed through as a distribution from the corporation. But the bottom line here is there are a lot of options. My only point is I wanted to say was like the script has flipped a bit on corporations, and there are benefits to being incorporated because the tax on those is really low. And you can avoid self-employment taxes, and you just keep you reinvest, and you just like keep growing and growing. I think that's what a lot of these startups in Silicon Valley and stuff do. I mean, I think that's, the Tesla story, Microsoft,
they don't take profits. They always reinvest back into the company. Yeah.
They got founder stock, and they got like billions of dollars in founder stock. They never pay taxes till, at the end of the day. Maybe they just pass it on,
Yeah. So, like a triggering event is, I just know that term. So I wanted to, before I ask, or before I uplift it, one more thing from Brandon, and because this is really good. I thank you for the interactivity and the good questions and thoughts. Clearly, there's a lot in here. My question though is, it's not an either or. It seems like then, like you have here these tax strategies. It's not that you create business entity like an LLC or consider incorporating. You could actually do both. Again, depending on your tax situation and all that.
Yeah, I think that there's arguments. I think every person's situation is going to be different.
Yeah.
And I think that, these different, in many ways, our system's very good because we have a lot of optionality. We have a lot of ability to elect different routes for how we want to do business. And I know a little bit about outside the country, and a lot of these other countries don't have that flexibility. So it's pretty good. I mean, that now, it's tricky. You got to figure this, you want to talk to a professional and figure this stuff out a little bit, but there are good ways to kind of to set up your business.
Absolutely. Okay. So Brandon here, I'm going to just read it out loud, and then we can have one more little back and forth. And then, we didn't have a set time for this. I wasn't sure if we could go over an hour, but knowing my knowing my inclusion of things, it always does seem to go over an hour. So here we go. Brandon says you can pay. So if you do own your S corp, have your LLC owned by your S corp. Brandon is saying you can then pay yourself W-2 from S corp and then take profit distributions. And then he says, if you're going to deal cards full time, it can also be beneficial to have W-2 income for when you want to buy a car or other things, as opposed it would all be 1099. But then he finally he says to end that, he says definitely no one size fits all, and I think that's the main thing to get out of this. But did you want to talk about anything he said before that?
No, it's thoughtful comments. I'm sure he's put a lot of thought into this, and definitely right about S corps and pay out in a couple different ways. They do wage distributions, and they also do profit distributions. And so, there's a lot of different pieces of this.
Smart guy. That's all. That's all I'll say. It's fantastic that we have some knowledgeable folks within the hobby, and always sharing out, what's worked, what hasn't, experiences, right? More than advice. Is good to do. So I think that's fantastic. So thank you so much, Brandon, for that. And people who are saying hi in the chat, hi as well. Thank you guys for being here. Should we move on? Oh, is this the last slide? But we didn't get to the last three. Yeah, we didn't get to the last three.
So this next one is not unique to collectibles or cards. This is something that really anyone that invests in markets or assets appreciates, which is the idea of tax loss harvesting. Basically, simple concept here is if you have capital gains, and you're going to owe tax on those gains at the end of the year, and you have other assets that you have not yet sold, but have a built-in gain inside, a built-in loss inside them. So they've gone down in value. The idea is sell those before the end of the year, and you can net your loss against your gain. That's tax loss harvesting. So you're basically eliminating your capital gains tax by selling an asset that has a loss and applying that loss against the gain. If you don't want to sell that asset that has, or the card, the sports card that has the loss, you're not able. One thing you can't do is just sell it and buy it back the next day. They wrote specific rules to prevent people from doing that. They're called the wash sale rules, like wash the loss, I guess, and repurchase it, wash and rinse. I don't know. There's something there.
Yeah, no, that's interesting. Yeah, no, that's very cool. You know what's really coincidental timing is before you even started talking about tax loss harvesting and like what you just mentioned. Goat Sports Cards wrote in the comments in the chat. I asked a friend who owns a shop how he does his taxes, and he told me he pays $10K a year for a firm to manage everything for him. And then here's the part. He says he did say his business is set up for no inventory at the end of the year. It's called kicking the bucket for a later date. And I thought that's like incredible timing with what you're talking about.
Yeah. I'm really glad that Brian raised this question and made the comment, because I wanted to talk a little bit about inventory, and I don't think I put it in any of these slides. But one thing that's important to know is you don't get to deduct your inventory. If I go out and buy a bunch of cards and I don't sell those cards this year, it's not like I get to deduct the cost of those cards on my tax, on my business Schedule C, my business return at the end of the year. Those are inventory, and those get deducted when the cost of those cards get deducted when it's actually sold. So inventory is that's kind of a problem, and that's why you want to be selling stuff, of course, all the time, because you're making these investments and you're not actually. And one of the reasons you want to be selling stuff is because you're making these investments and you don't actually get to deduct the cost of those that inventory until you actually flip it. So
fantastic. Thank you, Goats, for that insight and sharing your friend's experience. And again, not sponsored by Goat Sports Cards, but he is opening up his shop real soon in the Herndon, Virginia area. So go check him out. Friend of the podcast and former guest of the podcast as well. So just wonderful stuff here. Really, really enjoying.
Will we see him in Chantilly next week?
I won't get into it too much, but he will be set up. And he's been very kind to kind of ask if I am and all that. I told him what I'll tell the crowd here. I am not 100% sure what my plans are going to be, but I do know that I will be at a card show 2 weeks from now in Wilmington, North Carolina, and this is not going to be any sort of sponsored read, although I do think that I will have that promoter on the podcast sometime down the road. But I'm gearing up for that show. So again, I'm not entirely sure what's going to happen next week, but yes, we are recording this the evening of March 30th. Federal filing, again, doesn't have to be filing. You can file for the extension, but April 15th. Oh my goodness. What are there? There are two absolutes in life, right? Death and taxes, right, Ryan?
Absolutely.
So Goat says, yes, sir. He will be set up at Chantilly. So thank you, Goats. And okay, so let's just briefly talk about this. Goats offered, if I am free on Sunday, that I could vend with him, that I could be a vendor. I've never been a vendor at Chantilly. I've been there maybe like 4 or 5 times at this point. It is the biggest regional show in our DMV area. It is at the Dulles Expo Center. I shouldn't say anything else. They didn't sponsor. But no, everyone knows about the Chantilly show. It is going to be like the next week, whatever, April 4th, 5th, and whatever it is. So Goats was very kind to offer up a potential vendoring opportunity on Sunday. It's really nice. I really appreciate his friendship. I just don't know. That's what I'll say about that. So thank you. And so we do have the last 2 bullet points here for the last slide.
Yeah.
So Ryan, I'll let you take it away with talking about donating appreciated cards and
Yes.
memorabilia.
Yeah. All right, this is one that gets my view is this gets misreported, and I don't think the information on this is correct. A lot of the information is correct online based on my research. So, one of the great things is you can donate your cards that have appreciated in value and get a charitable deduction for the actual fair market value of the card. So you're not getting a deduction for what you paid for it. You're actually getting you can get a larger deduction for its current value. But the problem is, I don't think people fully recognize that in order to do that, you can't be giving it to a charity that's just going to turn around and auction it off or sell it. You actually have to give it to a charity that's going to put it to use for kind of the purpose it has. So I think that this only works if you're like donating to a museum or the Hall of Fame or someplace, or if it's like artwork, it's someplace where the art's going to be displayed and stuff. You don't actually, in other cases, if I'm just donating a card to Red Cross, and the Red Cross is going to take that, turn around and throw it up in the golden auction or something, my deduction is going to be limited to my cost basis in that card. So that's my sense, and I don't think that nuance is really reflected in a lot of the kind of reporting on the benefits of donating appreciated collectibles and cards. You got to have some place for it to go where they're actually going to be putting it to its like use. It's like they're going to be getting use out of the thing you're giving them.
I did not think it was going to go there. I really did think it was the latter or the former. So I do have two follow-up questions to that. First is, what if it's not an auction? What if it's a buy? It doesn't matter. You're just talking about the sale of the card. Like,
the recipient has to be, it has to be for their, I don't know if this is the right term, but it basically has to be put to use by them in their business or in the charities, like a museum, basically. They have to be for the purpose that the collectible has itself, or for depreciation of it. Yeah.
Well, I guess that's where my second question was going. Like, what is the purpose of collectible cards? It's like, there's the intrinsic value, the monetary value. We're an hour and a half, almost an hour and a half in, and the first time I think we used the term fair market value, FMV, and it's like, wow, like, what do these cards really have? What is the fair market value? Like, are we even talking about, is a fair market value comps, right? I mean, people talk about comps all the time, but then we also know that there are things out there like fake comps and shield comps. So it's really, we're definitely getting to some interesting topics here.
Danny, I think one of the most disputed tax issues is valuation disputes. So, always good to get appraisals, and I mean, there are professionals out there that just appraise cards, right? And they do it for insurance purposes. They do it for these kind of reasons, estate tax and charitable donations and stuff. But yeah, it's I think that is a very highly contested, thing. What is the value of certainly for a card, right?
Right. No, that's really interesting. Thank you. Actually, I do have a third question. So, what if someone such as myself wants to donate to you, the promoter of the Mid-Atlantic Card Show, next one being May 3rd? Actually, maybe can I say that this is sponsored by the Mid-Atlantic Card Show? I mean, it's funny because it's a dual cross stream, but
I don't know if my stream is working, but if it is, I haven't been looking at any comments from it.
Well, we've had at a tight, we've had like 10 live watchers. Again, some of the kids left, and even with the kids leaving, we had a good amount of people watching, and we got some great questions coming in. What I've realized with content creation, really, I think the quality of the watcher and the consumer matters more than the actual quantity number. Ryan just put up there if you want to show it again.
I got another one. This is my hot
solo
off the
layout.
Kaboom! Hot off the press Kaboom flyer.
Not gonna get in trouble for that one. No, I'm just kidding. First off the line, we got to call early ignition. First off the line.
Yeah.
First off the
Hey,
line, Kaboom.
I will say this. Here's Denny, you might appreciate this. First off the line will be an hour long instead of half an hour at the next Mid Atlantic
Nice.
show. So hopefully that will help with the crowd a little bit and
I
getting
like
people
it.
in faster.
Oh,
So
that's a good point. Yes,
yeah.
absolutely. That's a really good idea. And I will definitely help out with whatever. I actually may want to set up as a vendor promoter, as a vendor at the show. Again, we'll talk more about that later, but I have some ideas for content for the next show. And if you need help with the table, with the admission, the entry, I mean, I'm glad to do that as well. So we'll talk about that later,
Hey,
but it's going to be a
Denny,
great
I think
show.
the only route to a table right now is if you win the Mid Atlantic March Madness pool because
I
we have
think I'm doing
we have
pretty
no
well.
extra tables.
Oh,
So
no extra tables. I totally understand that, but I feel like I know I had Duke losing early because I thought the Cooper Flag injury was going to be worse than it was. This is the second time ever in NCAA March Madness history that all 4 number 1 seeds have advanced to the Final Four. Sorry, spoiler alert. I mean, it's been a day old, but hey, there's no way I spoiled it if you've been watching any news or sports news. But yeah, I feel like in the brackets, I don't know how many people you had enter, but I think I'm in the top 5 right now.
the top 5 of ours. Oh well, maybe you will
Well,
win. Maybe you will win a
yeah,
table
because
then.
the Florida
Okay,
Gators, yeah, because I'm a
you take the
homer
Gators all the way.
all the way, yeah.
Yeah.
So I think I have like maybe 5 or 6 different brackets in different places,
They were
but I feel
very
like
lucky yesterday.
hey, it was all skill. Walter Clayton Jr.
Well,
But
great free throw shooting.
yeah, yeah, Texas Tech definitely did not do well in the free throw department and opened the door, and the Gator just stomped them at the end, but they came back big time. Yeah, Goat says Auburn. No, boo Auburn. But we won't talk too much about that. We're going to end this really soon. That said, May 3rd, the Mid-Atlantic Card Show, a one-day show, Silver Spring, Maryland. Ryan, the promoter, and it's funny. This is not the reason we did it. We did this for the people. Like really, like Ryan wanted to do this, and I kind of glommed on at the end, saying, "Hey, maybe we could cross stream." But that's a really awesome postcard. Adrian Dantley will be signing autographs. He's gonna have to get a Form 1099 NEC. So
Demi, the jury is out on basketball signers. We're going to see how that
really,
goes. We know the
oh,
Redskins are very popular. You don't see a lot of basketball signers at these local shows, but he is a big. In my, I grew up in the '80s. He was a big deal. So
yeah.
I'm excited to have him. We'll see.
Oh no, absolutely. I mean, basketball is my wheelhouse. That's my jam. So absolutely. So if I donated a card, so yeah, I want to get to this question before we do the last step up in basis. If someone such as myself or Goats wanted to donate a card for you to give away in your giveaways, would that be considered donating appreciated cards and memorabilia, or no? Because even though there was an auction or fixed price, it wasn't held in a museum type of setting.
Well, as much as I would like to say that we're a charity, Mid Atlantic Show is not a charity, so it would not be a deductible contribution. But I think there is potential business expense deductions to giving giveaways. For example, like if you give a giveaway, and then I'm going to kind of plug your business and your table, your shop, or whatever, then I think you can argue that giving that to the show served a marketing and business purpose for so you would be taking a
marketing.
I mean that you're going to get an opinion. I probably want to talk to somebody else about this, but I think you can make an argument that is a solid, a legitimate, ordinary, necessary business expense and part of marketing to get the word out.
The argument could be made. The advice. This is not hard and fast advice or rules. Again, with a lot of this, I like the way you put it, Ryan. There's a lot of flexibility, and it seems like there are some people who benefit from having, like we. I think a lot of Americans, we just get so upset at the thought of these multi-billion-dollar corporations not paying any taxes, but they find all the loopholes. They have tax departments. They know how to game the system, and it's sometimes you have to pay for that expertise. These tax departments aren't doing it for free. They're getting paid a handsome amount to make sure that they pay as little as they legally are able to. So
absolutely.
Yeah. All right. So the last
bullet.
Here we go.
Very So this is not unique to cards, but it's a certainly important one for anyone with a big collection, which is if you donate, well, if you leave your cards to your heirs, the built-in gain that has accrued on those cards basically resets, and there is no tax that's owed on the built-in gain. And then your heirs get stepped up basis, which basically means they get a fair market value basis in those cards. So you could say that the built-in capital gain kind of goes poof at death, disappears, and then resets in the hands of your heirs at the current fair market value of those cards, and they would only then owe tax on future appreciation relative to what it's worth today. So that's that's one of the kind of beauties of the tax system, is that a lot of this built-in gain, if you actually hold an asset until your death, that you get a step up in basis. Your heirs get a step up in basis.
Oh man, what a way to end. What a the air. I mean, yes, there's a lot in there. Thank you. I mean, we are just getting more, I don't know, nuanced and again, like triggering events, and yeah, it's the step up in basis. There you go. No, absolutely.
I mean, I think it's very important for older collectors that have amassed a big
yep.
thing, and they don't want to, if they were to give it away now during their life, or transfer it to somebody else, they would pay tax. And this way, basically they don't.
I have a little silly trivia. Well, not trivia, not silly trivia to the Steinbrenner family, but I forget exactly which year George Steinbrenner passed away. But some people, I know he passed away the last year that there was some sort of end to there's a sunset to like some estate, death tax, right? They call it death tax. And some people were joking at that time, whether it was on the internet or whatever, but that he was such a cheap and petty man that he wanted to pass that year to give as much money as it could to his heirs. It's kind of silly, it's a man dying, blah blah blah, but it's George Steinbrenner. I mean, come on.
Yeah.
So
well, I know I've heard stories about people trying to keep their relative alive, kind of on the respirator to get over to January 1st.
Oh my goodness, that is so. Yeah, like again,
you're right. Though there's a brief period where the estate tax had sunset, and if you died during that very short period of time, I don't think it was a full year. I think it was like a couple months or something. Then you would not owe any estate tax, and it would not surprise me if Steinbrenner managed to find his way into that.
My favorite Steinbrenner moments are all from Seinfeld, where Jason Alexander, George is working for him, and they just have him, they never show his face, and he smells the pizza and the vents. I love that stuff. Yeah. Brandon says you don't want to get hit with a gift tax for them to die a week later. So I love Brandon. I actually wrote this. Would love to follow up with you, Brandon, or anyone else if you want to reach out to me. And you do not have Instagram. DennyCards23@gmail.com. Brandon wrote, can't wait until some kid tries to get me to fill out a W-9 after a trade with cash on top. I thought that was really funny. I love that. And Goat says, so complicated, LOL. What did I get myself into? Hey, as a new sports card shop owner, you have got yourself into quite a fun time. You just get a CPA, I guess. Goats is my suggestion and recommendation. But what do problems have to be a hobby shop owner for sure.
Yeah, great. No, I'm excited to check it out. And he's a regular, obviously, vendor at the Mid-Atlantic show. And I always appreciate him being there. And I keep telling him I hope he's got flyers and stuff to bring out.
Yeah, absolutely. So I think we did come to the end. This is the last slide based upon I'm going to remove from the stage and just show our faces one last time. Unless there are any last second questions or comments, I just wanted to thank Ryan so much for this fantastic, again, like a beginning point for some people. I imagine there is content that you can search for on YouTube, but this happened. I can say it's the latest content, right? Because it's we're literally doing it live. It's March 30th, 2025. 2 weeks from the federal filing deadline. Again, either file the return or file for the extension. Austin says thank you and appreciate the live stream. Good stuff. Again, this isn't sexy. This is the eat your vegetables type of content. The educational, informative content can certainly get sometimes dry, but I think Ryan did a fantastic job. Goat says we passed out 300 cards at your last show. I
didn't even realize that.
Okay, I imagine he thinks business cards. Yeah, passed out 300 business cards at the last show. But Ryan, you really you know your stuff. I mean, those PowerPoint slides, that's not a small feat. Like, I mean, you really took the time to look up the tax, like the cases, and you knew what you wanted to talk about. So for me to just do my small part in uplifting it to maybe a little bit bigger of an audience, like I just thought it was such an important topic. Like, thank you for allowing me to do that.
Yeah, I mean, it's been fun. I want to, bring some useful information. And the show's grown, Denny, so I got to be on top of this stuff myself. Like, I have to figure things out, and I like to figure them out myself rather than necessarily pay someone else to do it. So, it's been fun trying to navigate these things. I do have to take issue, though, Denny. You have freed up my evening because I was going to watch the games on recording. So the two games from this afternoon. And I had managed to not find out the results of those, but that's okay. That's okay.
I'm so sorry. I spoiled it. I thought they were yesterday. I didn't think I was
going to be able to get through this without some discussion of the game. So
yesterday was oh my gosh, yesterday was Florida's game. I am so sorry. I just
realized. It came at the very end of the show. I didn't tell you in advance, so that's all right.
No, you did tell me earlier last week that you recorded something to watch.
Yeah,
but what? I gotta say this. I know some people do it, right? TiVo Nation and all that. Like, I cannot watch pre-recorded. Like, if I know that it was live, like I love basketball. I can't even watch like old clips. Like, even if like, maybe it's like documentary and it's like clips of a game, but like, you can find old footage of like full games of the Jordan Bulls, right? And it's like, I just can't get myself interested enough to actually watch full games that are not pre-recorded, even if it's like from decades ago or from like an hour ago. There's something about it where I think sports is the one thing where it really is such a water cooler thing where everyone tries to watch it at the same time because it is live. Talk about like live theater, live drama. It is the one thing that we can still hold on to that's not like a streaming service and binge watching. It's like, it's live.
Danny, that is all very true. I would only say, do you know how much time you can save when you don't have to watch the
commercials?
Yes. Especially a basketball game or a football game. Oh my gosh. I can cut it down from like a 3-hour deal to like an hour. So
yes. That is very true.
But you're right. There is a water cooler aspect to, trading messages and stuff with people.
This is why sports is such a huge TV deal, right? It's all four major sports, and including wrestling and NASCAR and Formula One, whatever you want to call it. Like live sports is so they pay so much money in TV rights because, again, the commercials, right? I mean, they pay for that because they know that they can get the advertisers to pay a lot because they know that it's like a other than the Ryan McCormicks of the world, people are just fixated on their eyeballs are on the screen. So we do, before we end, I just gotta say, Goat said Pistons and Timberwolves had 7 ejected tonight in a brawl, so you can tell that this is live. I am gonna have to check the replay on that. My guess is, Malice at the Palace, like that was like 15, 17 years ago, I guess at this point, but why is it always the Pistons in some capacity? The Bad Boy Pistons, Malice at the Palace, and now tonight. So I'll have to go check that out. But thank you, everyone in the live chat. Thank you, Ryan. You're fantastic. And again, the last plug, I forgot to put it in the chat. I hope I get his spelling right. The Hobby CPA. See, Coach is talking about the stands. Apparently, the fight went into the stands. That's crazy. James Skorheim, the Hobby CPA. You can find him on Instagram at _Hobby hobby underscore CPA. I hope I get that information right because I'm not 100% sure, but go check him out and go with him for legal advice, tax advice. Sorry, legal advice, tax advice from a tax professional. Ryan, um, excellent. Thank you so
Yeah,
much.
it's fun.
Fantastic. I learned a lot. I know that. So I think that's it. I'm gonna end the cross duel live stream, and hope you have a wonderful week. And sorry for spoiling the games you had on TiVo.
It's all good. It's all good. I got plenty of other stuff to do. So, all
All
right.
right.
Thanks, Denny.
Okay.
Yep.
Take care.
Bye bye.